Hello everyone. Global debt has reached a new record high, and this is something that very few people are paying attention to, and many are starting to talk about the idea that debt doesn't matter and that deficits are great, and that what we need to do is actually get further into debt and increase the deficits. Let's start from that premise. The accumulation of debt is not something that has no consequence. First, it is absolutely evident by now that it makes the economies less dynamic, and it makes the economies less productive, and also that growth is weaker. So, and it's very evident why, no? Economic agents, when they see that governments are entering into massive levels of debt and huge deficits, become less inclined to take risk and less inclined to look for spending or investment opportunities. It's very easy to understand why. Even somebody that doesn't understand economics understands the fact that the accumulation of debt and deficits means at some point in the future higher taxes or higher inflation. Either or both mean that your decisions today in net present value of investment and consumption are going to be affected. Because you know that these imbalances are not free and will never be free. No? People are not stupid, even if they're not economists. And here's where we hear new and imaginative views about what debt is. Let me talk about the most dangerous graph you will see ever, which is this idea that the accumulation of debt of governments is offset by the accumulation of savings of the private sector. This idea that each unit of deficit is a unit of savings, and that therefore the more deficit that governments incur into, the higher the savings, instead of the opposite. I know that it's quite funny, but some people are saying that. Some people are saying that each unit of deficit is a unit of savings, and that each unit of debt, therefore, has no problem because it is supported by savings. Let's start from the premise itself. The premise is that government debt and government deficits are going to be paid by your savings and your assets. Okay? This is very important to understand because it's confiscation. It starts from a confiscation premise because your savings and your assets are there to support your debt, no? And obviously taxes might pay deficits and might pay the debt, but they're not eternal. And definitely not all of the assets of the economy are there to support and to pay for the government debt. Let's also understand that it's not even a nation's, let's say, equation. It's not the deficits of one country, of the United States, of the UK, relative to the savings of the UK or the United States. It is the savings and the investments of global investors from all over the world, starting fundamentally by central banks and by sovereign funds of other countries. But there's also an important factor that is being ignored in this calculation, is that a lot of the debt that is being bought all over the world is not paid for. Those bonds are not paid for 100% in capital. Is that there is accumulation of debt to buy those bonds. Is that there is leverage built into the investment. So it is not true that it's one unit of saving, one unit of deficit at all. The idea that high deficits and high debt are not a problem because the cost of debt is low is a complete lie. Japan has been in stagnation for almost 3 decades and spends about 20% of its budget on interest expenses, even with low rates. And the reason why they have low rates is not because they monetize the debt, is because it's a country that imports a lot of foreign currency. Is that it's a country that is actually doing what it should do, which is to accumulate reserves from other countries in order to maintain its financial stability in an environment of extremely high debt and very high deficits. The idea that more deficits will in turn generate higher savings is completely farcical. It's completely farcical because it starts from the wrong premise that deficits themselves create savings and create spending. It's actually the opposite. Deficits are generating further imbalances that make the private sector become more prudent. This whole idea starts from a wrong diagnosis. And the wrong diagnosis is that governments with sovereignty, monetary sovereignty, can issue all the debt that they want, all the debt they think that they need, without any problem. That is incorrect. Even if you have monetary sovereignty, the reason why you can issue debt in your own currency is because there is confidence in that currency. That the central bank issues less than what demand is. This is a critical part. This is a critical part, that the issuance, that the money supply growth in that country is lower than the real demand for that currency. And paying attention to real demand is something that the Federal Reserve does phenomenally, and is something that the proponents of crazy monetary theories are ignoring, which is that the central banks that succeed at having a strong monetary policy and at the same time a strong currency is precisely because they pay attention to the real demand of that currency and the real demand from investors. And fundamentally, because even at the peak of monetary expansion, there was always a secondary market for those bonds that made it very, very clear that there was going to be some level of secondary market demand supporting those issuances. So it is not true that you can issue all the debt that you want. It is not true that you can issue all the currency that you want, and it's pretty evident everywhere. The most obvious reason is because the only factor that drives the improvement in the economy is when the leverage is invested into productive investments. Is put for productive investments, that you use a little bit of debt. That debt is used for an investment that generates a real economic return. That real economic return pays down that debt, pays down the obligations, and makes the economy grow further. When we subvert the process of the positive process of debt creation by putting debt itself as the objective, then what happens is that we destroy the entire mechanism of confidence that keeps the thin balance of economies that remain strong versus economies that go directly into hyperinflation and depression. And it's a very, very thin line. That's why the idea that the government is going to have more or better information about what is the real demand of that currency and of that demand of bonds issued by the country is completely farcical, because it has all the incentives, as it is not going to be the one that pays for the mistakes. The other problem that we need to understand is that when a central bank is buying an asset, in a bond, it is not printing money. What it's doing is making a loan on the economy. That loan needs to be repaid with what? First, with that asset being higher in terms of valuation, that the price of that asset goes up. Second, because the economy grows further. Third, because the strength of the financial situation of the country improves. All those factors make that loan acceptable. If what the central bank is buying worthless is buying worthless paper by increasing its balance sheet, it ends up destroying the confidence of the country, of the monetary system and the financial system all in one go. At the end of the day, this is all about you. It's all about the rest of the world. It's all about how everybody else perceives the strength of the economy, not what a particular government or a particular economist decides. And that's what we need to understand when we think about deficits and debt. That some countries might have a little bit more deficit and continue to have a strong currency because of the confidence in that currency, because the demand of that currency is rising, not falling, or those that decide to go crazy and ignore demand and then enter into hyperinflation and depression. It's very simple and very complicated at the same time. That's why governments should not be in charge of deciding how much that debt and how much that issuance of currency has to be, because they have all the incentives to pass the bill to citizens via defaults and hyperinflation, and none of the incentives to have a prudent monetary policy.